we're tackling common stock fundamentals for the Series 65 exam, covering shareholder rights, corporate actions, and key stock classifications. Common stock represents ownership in a corporation, and with that ownership comes specific rights. The most tested right is the right to vote. Shareholders typically vote for the board of directors and on major corporate issues like stock splits or mergers. The exam will test two voting methods: statutory and cumulative. Under statutory voting, a shareholder gets one vote per share for each board seat. So, if you own 100 shares and there are 3 open seats, you can cast up to 100 votes for each of the 3 candidates. A common exam trap is to confuse this with cumulative voting, which is more favorable to smaller shareholders. With cumulative voting, you can pool your votes. In that same scenario, you would have 300 total votes, 100 shares times 3 seats, that you could cast in any way you choose, such as casting all 300 for a single candidate. This gives minority shareholders a better chance at representation on the board. Another key right is the right to receive dividends, if declared by the board of directors. The board decides whether to pay dividends. Shareholders do not vote on this. But if a dividend is declared, all common stockholders are entitled to their pro rata share. Preemptive rights are also a critical concept. These rights give existing shareholders the ability to maintain their proportional ownership in a company if it issues new shares. For example, if you own 5% of a company's stock, a preemptive rights offering allows you to buy 5% of any new stock issuance, preventing your ownership stake from being diluted. The exam might present a scenario where a company is raising capital and ask how an existing shareholder's ownership is protected. The answer lies with preemptive rights. Corporate actions like stock splits are also frequent exam topics. A forward stock split increases the number of shares outstanding while decreasing the price per share, but the total market value of the investor's position remains the same. A company might do this to make its stock more affordable to retail investors. For instance, in a 2-for-1 split, an investor with 100 shares at $100 per share would now have 200 shares at $50 per share. The total value is still $10,000. A reverse stock split is the opposite. It reduces the number of shares and increases the per-share price. A company might do a 1-for-10 reverse split to increase its stock price, perhaps to meet exchange listing requirements or to be more attractive to institutional investors who may not buy very low-priced stocks. The key takeaway for the exam is that splits do not change the total value of the holdings. The exam also expects you to know market capitalization classifications. Market cap is calculated by multiplying the number of outstanding shares by the current market price per share. Generally, large-cap stocks are those with a market cap over $10 billion. Mid-cap is between $2 billion and $10 billion, and small-cap is typically from $300 million to $2 billion. The exam will link these classifications to risk and growth potential. Large-cap stocks are generally seen as more stable, while small-cap stocks offer higher growth potential but also come with greater risk. Finally, you must distinguish between growth and value stocks. Growth stocks are shares in companies expected to grow their earnings at an above-average rate compared to the market. These companies often reinvest their earnings for expansion and typically do not pay dividends. They usually have high price-to-earnings or PE ratios. Value stocks, on the other hand, are stocks that trade at a lower price compared to their fundamentals, such as earnings and sales. These are often mature companies that pay regular dividends and have lower PE ratios. An exam question might describe a company with a high PE ratio that reinvests all profits and ask you to identify it as a growth stock. A simple mnemonic to remember the rights of common stockholders is VALID, which stands for voting rights, right to assets upon liquidation, right to limited liability, right to inspect corporate books, and right to dividends if declared. For free practice questions, AI-powered explanations, and more exam prep tools, visit openexamprep.com. That's openexamprep, all one word, .com.